145% is very high, and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where, various elements built it up to 145. No, it won't be anywhere near that high.
And what level do you think it'll come down to if you haven't?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to have. It's not going to happen. We're going to be very good to China, have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made, so that won't happen. But they're going to do very well, and I think they're going to be happy, and I think we're going to live together very happily and ideally work together. So I think it's going to work out very well. But no, it's at 145%. It will not be anywhere near that number.
Investors, listen up. What you're about to hear could shift the entire playing field. For years, tariffs on Chinese imports have cast a long shadow over the global market, clouding forecasts, spooking investors, and tightening profit margins. But something just changed, and it starts with one name: Trump. After years of economic brinkmanship, the president is now signaling a major pivot. Yes, you heard that right. In a stunning twist, Trump is hinting at de-escalation, and the White House is reportedly considering slashing tariffs on Chinese goods. That's not a noise. That's a signal of potential growth, revitalized trade, and a sharp upward swing in global markets. If you're on the sidelines, still waiting to see how things play out, you're already late. This could be the beginning of a monumental reset in U.S.-China trade relations. From manufacturing to tech, from raw materials to consumer goods, the ripple effects of a tariff rollback could ignite sectors that have been dormant for years. This is not the time to be passive. This is not the time to skim the headlines and move on. Because buried in the policy shifts and political posturing is an incredible opportunity, if you know where to look. We're breaking it all down, piece by piece. What's real, what's rumor, and most importantly, where the smart money might be headed next. Before we dive in, kindly take a second to hit the like button. It really helps to support and to grow my channel and keeps us bringing you the latest market insights. Thank you. In a surprising yet promising development, the U.S. government is reportedly looking to roll back tariffs on Chinese imports drastically. We're talking about a potential cut from a towering 145% down to a much more manageable range between 50% and 65%. That's not just a tweak. That's a full-blown course correction that could pump fresh energy into global trade. But that's not all. Sources suggest the administration might implement a layered system, where products vital to national security or strategic industries could still carry higher duties, maybe starting around 100%. Meanwhile, less critical imports could face a softer rate of about 35%. This nuanced strategy shows that the U.S. may be shifting toward a smarter, more balanced trade policy, not just blanket tariffs. On the other hand, China has fired back, bumping up tariffs on American imports to 125%, up from 84%. That's a massive jump, and it didn't happen in a vacuum. The U.S., for its part, has loaded up a multi-layered set of tariffs on Chinese goods. We're talking about a 125% reciprocal tariff, plus a 20% tariff aimed at curbing the fentanyl crisis, and additional Section 301 tariffs ranging anywhere from 7.5% to 100% depending on the product. That's the reality we've been living in, but here's the twist. Markets are already pricing in a potential shift. And if those numbers begin to come down, especially from the U.S. side, we could see major relief across multiple sectors. Even big names like Tesla, TSLA, are starting to feel the pinch, and more importantly, they're being vocal about it. In a recent earnings report, Tesla revealed that China's new restrictions on exporting rare earth materials are starting to interfere with production specifically for its ambitious Optimus household robot project. Now here's the bullish angle. These very disruptions are adding pressure on both sides to strike a deal. When companies like Tesla, market movers, start highlighting the impact, policymakers tend to listen. It's no longer just about politics. It's about real business, real innovation, and real dollars on the line. As these tensions build, so does the incentive to resolve them. And when they do, expect a flood of capital back into the markets, especially in sectors like tech, EVs, and semiconductors, areas that have been throttled by these trade hurdles. And Wall Street? it roared in response. Markets surged midweek as traders and investors alike welcomed signs of a potential breakthrough after weeks of escalating tensions. The very idea of a tariff rollback sent a ripple of optimism through every major index. President Trump added fuel to the fire on Tuesday. When asked about current tariff levels, he didn't mince words. 145% is too high. It will come down substantially. His tone? Calm, measured, even diplomatic. He spoke of being very nice to China in upcoming trade talks. That's not just rhetoric, that's a pivot toward deal-making. And behind closed doors, Treasury Secretary Bessent is reportedly echoing those same sentiments. In a confidential briefing, he referred to the ongoing tariff exchange as unsustainable and emphasized the urgent need for clarity. This aligns with what he said just days ago in an exclusive sit-down, hinting that resolution may finally be within reach. Because the trade tension between the U.S. and China hasn't exactly cooled off. In recent weeks, the back and forth has ramped up dramatically. As if the U.S.-China story wasn't big enough, there's more good news on the global stage. Just this Tuesday, U.S. Vice President J.D. Vance and India's Prime Minister Narendra Modi made headlines by showing strong signs of progress in their ongoing talks. They're making headway in key areas like technology development, military cooperation, and energy partnerships, 3 sectors with massive economic upside. This is more than just diplomacy. It's deal-making that could pave the way for smoother supply chains, joint ventures, and increased capital flows between the two nations. For investors, that's a signal of new market openings and strategic opportunities beyond China. Meanwhile, all eyes are still on tariff decisions coming from the White House. In a calculated move, Trump has hinted at holding off on some planned auto tariffs. He's already paused duties on select consumer tech products, which is being seen as a strategic breather. A moment of calm before any future moves. What does that mean? A softening stance, even if temporary, suggests that the administration is open to flexibility, and that's exactly what markets thrive on. Less uncertainty, more breathing room, more room to grow. That said, the 10% base tariff that kicked in on April 5th is still active and currently applies across all relevant imports. But the bigger story here is the momentum. There's a clear trend toward moderation, negotiation, and selective easing, especially in sectors that have been under pressure for months. Let's bring you the latest ripple effects from this fast-moving policy shift. Because the momentum is not just local, it's global. According to insiders familiar with the situation, the Trump administration is reportedly weighing a tiered tariff strategy. What does that mean for markets? Potentially huge upside. Here's how it could break down. Products that aren't considered a national security concern could face a modest 35% tariff, still significant, but far less than the previous blanket approach. Meanwhile, items deemed critical to America's strategic interests, think defense tech, rare materials, and advanced electronics, could see tariffs as high as 100%. This more selective case-by-case approach shows a shift from brute force tactics to precision trade management. And for investors, that kind of predictability could be a game changer, especially for sectors previously caught in the crossfire. What's fueling this shift? Less than 24 hours ago, Trump himself confirmed that the final China tariffs won't stay at 145%. His words? They will come down substantially. That's a bold signal of de-escalation, and exactly what the markets wanted to hear. Backing him up, Treasury Secretary Scott Bessent didn't mince words either. He described the current tariff levels as unsustainable, a strong indication that serious recalibration is not just possible, it's likely. This isn't just chatter, it's a directional shift, one that could unlock growth in global supply chains, reignite investor confidence, and breathe life into industries that have been throttled by years of trade uncertainty. We're not just talking policy. We're talking about a potential springboard for global equities, emerging markets, and industrial giants that rely on cross-border trade. The bottom line? If you've been waiting for a signal to get back in or to double down, this could be it. So here's the takeaway. Tariff tensions are cooling, strategic clarity is rising, and global markets are starting to breathe again. From Washington to Wall Street, from Beijing to Bombay, the signs are all pointing in the same direction. Opportunity. Whether it's selective tariff easing, renewed global partnerships, or policy pivots from the top, the world is repositioning. And smart investors? They're not waiting. They're already recalibrating their portfolios for the next wave. This isn't just a policy shift, it's a market moment. And if you're not watching closely, you'll miss it. So here's what you do next. Watch the sectors under pressure. They could be tomorrow's top performers. Track the headlines, but invest based on the undercurrents, not the noise. And most importantly, stay informed, stay bold, and stay ahead. Make sure to like, share, subscribe, and hit the bell so you never miss an update that could move your money. Because the next trade story is already unfolding and it might just be the bull run you've been waiting for. I'm Cashflow Boss, and this is your edge in the market. See you in the next one. Thanks for watching.